The next management, Nigel, Glenmark management is with us.
Well, that's right. Let's go across to Mr. Anurag Mantri, the Executive Director and Global Chief Financial Officer of Glenmark, who joins us on the show. Hi, Mr. Mantri. Good morning, and thanks a lot for speaking to us here on CNBC TV18. Well, before I get to your numbers, I just want to address the recent news piece. But President Trump, he's looking at putting a tariff on generic drugs. If you could tell us, how does it impact Glenmark? How much does the company manufacture in the United States right now? And are you looking at more onshore manufacturing in the United States? A quick word on this first.
Thanks, Nigel. So, Nigel, there is no immediate impact on tariff on us. And if you see strategically, we have two distinct points. One is that our overall business mix, only 22 to 25% comes from US. So as compared to the other pharma, we have a comparatively widespread geographical mix. Second is that we have our own plant in Monroe, which started commercial production last quarter. And from FY28 onward, we see that meaningfully contributing it. So it will be coinciding with the tariff timelines with that. And while we continue to watch the situation when evolving policies development closely, there's no immediate impact, and we'll prepare accordingly in sync with the strategic evolvement of these trade negotiations and other developments.
It's an evolving issue. We'll see how that goes. But since you mentioned Monroe, let's talk about the US business as well. Now you're at around $100 million approximately on a quarterly run rate, which is a good growth of the last few years. How do you see this part of the business pan out, and what's the quarterly run rate we should be looking at, say, in a few quarters?
See, US is now this year, US will be a very strong growth for us. And because, as you know, that we launched fluticasone 44 mcg last quarter, and we saw a good growth. That was a CTG exclusivity. And we also have two more filing which will be launched in H2. This is the fluticasone 110 mcg as well as the ipratropium. So we see a good growth across respiratory plus royalties. We launched our own commercial through our own commercial network. So that's a relaunch of royalties. Then, so overall, we see a strong growth this year. If you see this quarter, just delivered almost 18% growth. But I think going forward, we continue to see a momentum. Part of it was also contributed by the currency, but still that we are seeing a good growth traction in US.
So Anurag, as Nigel asked, what will that $100 million become? Because that run rate, yeah.
Yeah, so this year, I think overall we will close more than $430 million sort of overall full year. So run rate wise, it will be upward of $100 million.
If you want to give us a sense of, say, next year, FY28, just trying to understand that how does that move up? You may have some visibility, right?
Yeah, so see, US will continue to move up around 10 to 12% annually. So this year, that's why I'm saying this year, FY27, we expect a $430 million plus of sort of closing for the year. And run rate wise, for this year, it will continue to $100 million.
Anurag, your margins adjusted for the AbbVie licensing income was at 16.6%. While your headline margins were at 20%, but your guidance for the full year is 21 to 22%. What exactly gets you to 21 to 22%? If you could, give us the outline for that.
See, margin, if you remove the IGI revenue from the top line, then you have to remove the IGI expenses also from the thing. And if you remove both from both sides, the margin are still above the 20%. So, and that's what exactly the guidance, what we have given is that 21 to 22%. This quarter margin was 20% despite the escalating cost pressures. We have seen across the API cost, packing material cost, as well as logistic cost, across there is a continuous cost pressure. So despite that, we delivered 20% margin. And if you see the revenue, our EBITDA growth has been more than the revenue growth, which clearly shows that our quality of earnings is improving in terms of the mix, as well as we are mitigating some of these cost pressure through these measures. So overall, we are confident that we should be able to, we are keeping our guidance intact for 21 to 22%. So like-to-like basis, if you remove IGI or income from the revenue, then if you remove IGI expenses from the P&L expenses, then the margin is still above 20%.
that. And India growth momentum, you are guiding for 12 to 15% growth. What is that contingent on? And what was the contribution of the semaglutide? Because you did launch a vial and pen combination. So how much did that contribute in Q1 and for the full year, your expectations?
So India has been a very strong franchisee for us. It's been growing. This quarter, it has grown almost 15.5% in terms of the revenue. All our cardiac, chronic respiratory, OTC business, also the growing oncology products are growing very fast. So we continue to see a good growth momentum. If you see IQVIA across, we are growing much faster than the market. Semaglutide we launched that actually helped us in terms of reigniting our diabetic franchisee. Though it's not going to be one key growth drivers for us, but at least it's helping us in terms of our reigniting our diabetic franchisee. So we'll continue to see the momentum in Glipec. However, the other key growth driver will be continue to be chronic respiratory, cardiac, derma portfolio as well as the oncology portfolio.
All right, Mr. Mantri, very quickly then tell us about the European business that's growing in double digits. Do you expect this to sustain? And also the emerging markets that's growing, I think it grew last quarter by more than 25%. The outlook on both these two parameters.
See, emerging market, we are very optimistic for this year because we have actually expanding our field force. We are launching the oncology product. So we are building the entire oncology franchise in this market. If you see this quarter, LATAM, MEA, Asia, CIS, all the three actually continue to see a good growth momentum, and APEC also continued in that momentum. So overall, we see this year to be a very strong year for our emerging market business. Europe, if you see, we are expecting the higher single-digit growth this year because last 4 years we have been growing one of the almost double-digit and 25% growth. So Europe this year, but we have a good launches on terms of derma and respiratory. So Europe will be a more or less higher single-digit growth this year.
Okay, Mr. Mantri, short on time. It's a big day for the RBI, so we'll have to wrap up with this conversation, but request you to join in sometime during the quarter.
Okay, thank you.
We'll take a short break on that note. On the other side, we'll go full tilt on the RBI policy.